there's something we need to discuss, and this is why I think the market is getting some mixed signals. Now, Justin, you're a guy who does technical analysis on stocks and commodities and I don't know, whatever's not nailed down. So why are you going to talk to me right now about Libor? Well, this is why. So buckle up. This is the big show here, at least as far as the macro analysis goes. All right. So what's going on here? Libor here, since the beginning of the year, has basically doubled. Now, why? And we're way off the lows on 2015. Now, okay, we rallied all the way up to the peak in 2007, and then that coincided with a very big pullback. But this was a very good period for the market. So Libor was rising. All right, so what's different this time? My answer is that this was very low for a long time, and there was the reach for yield, of course. And something took place just recently, which I think really has accelerated this, and that is the tax bill. Part of the tax bill is repatriation. And I think a lot of companies who were domiciling cash overseas because they didn't want to bring it back here to pay taxes put that money in what companies always put their money in, commercial paper. And what they're going to have to do is sell that commercial paper and repatriate the money. And that selling is causing this spike here in the Libor. And that's, I think, is flowing into HYG, which we'll get into a little bit. So something else has happened. We raised the U.S. debt ceiling, and since then, interest rates have been rising earnestly. There's been a lot of issuance of bonds, and obviously, if there's more supply of bonds, prices are depressed and interest rates go up. And you just had this omnibus budget pass, another 1.3 trillion, and that's going to be more debt, higher interest rates. The effect of this is being felt around the world. The Hong Kong dollar is on the weekend. There's probably going to have to be some intervention there. They have the peg. The Saudi interbank rate, their overnight rate, which is their version of Libor, is actually lower than Libor. It's being below Libor. The last time that happened was in the financial crisis, and the spread of Libor over, I guess, the risk-free, what is a risk-free rate, the overnight index swap, it's more than doubled since January. You can see. So I think that this is having some unintended consequences. I don't think that the Libor is going up here because we're going into necessarily a financial crisis, but sometimes the movement of something like this could trigger it. So there's been nothing near the order of the financial crisis, but there has been some buying in credit default swaps and all those marvelous instruments that caused problems. Now, due to some of the regulations of the financial crisis, a lot of our companies, our banks, our financial institutions are not able to do the type of proprietary trading and derivatives that they used to do. Deutsche Bank, in all their infinite wisdom, scooped all of that business up. And when anything like rates, like something like a Libor, come under pressure, this becomes problems, and people start speculating that Deutsche Bank is going to have an issue. So that's, I think, what's also accelerating some of this fear that there could be some type of a Deutsche Bank crisis. Not being talked about, but I do think that this Libor situation is going to start getting a lot of media play, And I think that, we'll do it now. I'll just show you quickly. HYG, I had said that there's really nothing stressing the financial system right now, and there was really no reason for these rates to be kind of rolling over. But I think that repatriation and that selling of that commercial paper, which is just corporate debt, is fueling this. I think that that's what's been happening here. You've been seeing selling in that for the repatriation. So that's what's going on there, and that's, I think, going to be a very big story in the coming weeks and months, when other people who pretend they don't watch my broadcast do, and they talk about it. Anyway, that's what's going on there, and I think that explains this situation. We've been a little puzzled, and now we're not. That's what's going on there.